quick shout out to today's sponsor, Katana. We'll hear more from Katana later in today's episode.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
All right. Good morning. Welcome back. Another 0x Research live stream. Joined today, no Boccaccio. Boccaccio's out. He's off somewhere in the ocean, enjoying himself, maybe getting lost at sea. Instead, we've got Carlos, something of a legend this week, I will say, from the research team, joining us, and Kunal as well. Although, interestingly, Kunal, I think your Twitter is actually Kunal Legend, so maybe I shouldn't have used the word legend. How are we doing today, guys?
All good. How about you?
Yeah.
Doing good. I guess, kicking things off, the market's hot. Bitcoin is kind of testing all-time highs again. Feel like we're repeating, if you look back a month or a month and a half ago, it was like we were playing this game and things were pumping. Although maybe separate from Bitcoin and crypto, like the broader market has kind of just been continuing its grind up. Some of that seems to be like Trump admin related, taking stakes in different companies. The AI investment cycle has sort of continued. We've seen big raises and like co-investment and like different equity stakes and partnership deals and a little bit of debt financing, like kind of continuing that trend. But that's been kind of nonstop. In crypto, Bitcoin, I feel like the past few months has been a bit more sideways, but broadly up. Like it's still, significantly up on the year, and up over the past several months. But we've been hitting like this mid 120s mark and then sitting in this range. So I don't know. What do you guys think? Are we primed for, stepping up to new highs, or, this is just another test and we'll maybe hang out again for a month or two?
Yeah, I think it's been a great start to Q4. Obviously, like last week, we saw equities closed at all-time highs. Like just investors are shrugging off the U.S. government shutdown. Mainly tech stocks have been pushing up the market. I think you're right. Like Bitcoin has been lagging gold specifically over the past month, but it's now above 125K. Touching all-time highs, and we have some notable outperformers in the past week. I think everyone saw Zcash like just ripping, and I don't know, like for those who have been like more than one cycle, like maybe some PTSD, because usually when Zcash bombs, it's usually a sign that things are a little bit frothy. We also saw other notable outperformers that I think we'll discuss, like MetaDAO. And definitely some notable strength in BNB and BNB related coins. So yeah, I think the market is a bit hot, but I think I'm constructive going into Q4.
Yeah, so same for me. I think like one of our colleague, Mark, shared the analysis, right? So when gold tops, usually there's a lag effect, after which we see BTC as well hit new all-time highs. So again, he perfectly nailed that, and that's exactly what we're seeing. So like the past few weeks, it was a lot of sideways action, but now we're finally seeing that surge in Bitcoin again. So that's definitely a good sign for the markets. I do think we could see some momentum going forward. But I think at the same time as well, there's a bunch of assets that continue to underperform. Like it's always good to, like, what I like to do is have a pair trade on. There's really a lot of these assets that, you could say like Bitcoin L2s or these new Bitcoin restaking protocols that I feel like are great shots to the Bitcoin trade, and that has worked pretty good for me. So I think that kind of helps. You never know when's the next sideways action, but it's always good to hedge some of that exposure.
I like that. A good bit of optimism, it sounds like, broadly. I do think, at least within crypto, and this is something we've continued to see, and maybe this is just more naturally kind of how most of the industry tends to be, but definitely like narrative cyclicality continues to dominate. Outside of the few, you have like the few outperformers that have consistently, growing revenues. And I guess if you're thinking about like maybe Hype or some other examples like that, where revenues are growing, they're shipping it all into the token for the most part, and it continues to grind up and to the right. Outside of that, it seems like we're continuing to kind of trade through our different narratives and cyclical attention on things, but that's okay. Bitcoin's doing its thing. You got a few key outperformers that kind of month over month look really good. And I think probably a lot of the market, and maybe a lot of us even here at Blockworks, we actually have fun trading some of the silly narratives too. So that's okay. There's a little bit for everybody right now, which is good. And we're seeing more protocols. I think more and more we're seeing protocols, and this is something Mippo said actually in a tweet last week, are starting to look a little bit more like companies as time goes on. And so probably more and more over time, that I think the expectation will be that we'll kind of gradually at least get a little bit more away from pure narrative activity and more towards this thing has a sustainable business model. It makes money. It should be worth XYZ for various reasons. Trends up into the right as revenues trend up into the right. Things along those lines. Before we get into the main topics for today, I just got to do a few quick shout outs. One, DAS London is literally next week, the 13th through the 15th. Yeah, next Monday through Wednesday. I know next Tuesday, Boccaccio himself will be there live at DAS doing a live 0x Research live stream with a few panelists from the event, probably some big names that you know from key protocols, but it's Blockworks' biggest institutional event. A lot of speakers from representing like a ton of protocols, a ton of TradFi businesses from around the world. So if you want to get your tickets and you can make it out there next week, 0x100, you'll get £100 off. And a couple of the guys from the team will see you there next week. We would love to have you there. So get your tickets. Kind of your last chance. This is your last week. You need to get a flight if you're not already out in the UK or over in Europe. So get your tickets. 0x100, £100 off, and we will see you there. Boccaccio will see you there in person. Outside of that, we are still hiring. It's crazy, I know. We've actually expanded this team. Kunal is one of our more recent additions to the research team. The data team, all the teams have been adding, but we are still hiring, looking for research data analysts. So if you live in SQL, you love on-chain data, you love digging into trends, figuring out what's going on in crypto, definitely apply. Check links in the show notes. Let us know. We'd love to hear from you. We've been on the hunt for great candidates and great additions to the Blockworks team. So reach out, and I'm sure if you have that dog in you, maybe one of the teams will find a fit for you. But let's finally get into it. That was enough chilling and ranting from me. I guess one of the big topics, and I think let's kick it off. Carlos, you dropped a report last month, a couple weeks ago, on MetaDAO. I think you came on the pod also as well, and talked about it maybe while I was out that week, and laid out your thesis there. I know Ryan Connor was raving on the timeline saying Carlos' bear case was a 150% move to the upside from when it was trading at like 150 or so, I want to say. That has actually played out. We're looking maybe more at that base case. Now, that was like a 1 year forward-looking time frame, so I don't know that you were expecting it to happen in 1 week, but it did. So I don't know. Let's recap MetaDAO, like thoughts on like what's playing out now, kind of the fresh attention on it, why such a strong like kind of upward repricing. Even in your bear case, I can pull up a chart that you have, but yeah, walk us back through that. Like, what do you think now? Any changes to your thought process, and how are you thinking going forward on it?
Yeah, so basically when I released the report, I knew it was in anticipation of the Umbra ICO. So I knew it was kind of like a good timing, but I got very lucky in the sense that I did not think like everyone was going to start to pay attention to it, and it was going to rally like 300% in the past week. Like that's just been pretty insane price action. I do think that MetaDAO is misunderstood by many in the market still. I think it has a very unique value proposition and differentiates from current ICO solutions in the market. So if you think about the current ICO landscape, you have like two different kinds of things, right? You have like Believe, and bonding curves like Believe, which are like early stage startups, but you have very high adverse selection because tokens there are structured as meme coins. So essentially, token holders don't have any financial upside, or like or token holder rights as it comes to like the project success. So it's likely that founders launching there know this, and you're just being like robbed basically. On the other hand, you have things like Sonar, MetaPlex Genesis, Kaido's Capital Launchpad, where adverse selection is lower, but usually you have races that are post-raise, meaning like projects launching there have already raised seed from investors. They are probably launching at 5 or 6 figure valuations, and so it's probably easier to invest at this stage. But again, it's a lot more expensive, let's just say. Whereas MetaDAO allows you to fund like pre-seed startups and like reduce this adverse selection issue by allowing the founders to send a credible signal to the market around enforceable token holder rights. And they do this with two mechanisms, which is first, funds are sent to a treasury, which technically is just a smart account on squads, and that is controlled by future key. So if a founder wanted to rog and take all the money, well, they can't because they just have a monthly burn rate that they can spend. And if they want to increase their burn rate or increase like their limit by 1 month, let's just say, they have to raise a future key proposal, and that has to be traded on conditional markets, which is what's happening today with Omnipair, for instance. And yeah, so and the other thing is that the IP of the project, so social media, the branding, etc., are given to a legal entity that is also controlled by future key. So holders have legal recourse in case the team misappropriates revenues and whatnot. So that's basically like the whole thesis, like unruggable ICOs and internet capital markets as it was envisioned. And I think like it hasn't played out still, but people are paying attention to the model more. And I think like with the Umbra ICO, it's evident that the narrative is quite hot. Like it's been live for like 2 hours and they have already pulled like $4 million in capital, which is 4 times what Omnipair ICO pulled in a 7-day window. So yeah, those are like kind of my thoughts for now.
Gotcha. I think we should talk about these ICO platforms more broadly. There's definitely been like a kind of continued uptrend there, especially like we had sort of the Launchpad narrative, and that's resulted in now, I think, a shift more towards, Believe was maybe a start there where we got into this ICM narrative a little bit, have a Launchpad specifically for actual like maybe protocol or tech based tokens to support a company or a business. Now you've got, I guess, MetaDAO is one, and you just kind of went over that model a little bit. There's Metaplex, there's Kaido, there's probably even a few more outside of those. And Messi in the chat is actually mentioning these as well, saying Kaido needs KYC, Metaplex is hard to contact and get listed. Be that as it may, seeing all these platforms now with like a good volume of like consistent ICOs rolling through, and I guess I would wonder to both of you. I know Kunal, we had you on. You talked about Kaido a little bit in the model there, at least as it relates to maybe the Kaido token and that valuation. I don't know. What do we think about these different platforms? Like, how meaningful are the design of the sales? Do we have like a particular lean one way or the other? Like, am I more interested in Kaido because, if I'm participating in the sales, or maybe I just think that like ICOs are back, I can hold the Kaido token, and if people are contributing to these things, it's earning incremental revenue. What do you think, broad strokes, on these competing platforms?
Yeah, my take would actually be a little different. I feel like the mechanism doesn't matter as much, but what more matters is the quality of projects launching and the number of success stories you get from the Launchpad, right? Because I feel the narrative will follow that. Like the moment you have a few big raises on the Launchpad, these raises do well, then everyone's going to be like, hey, yeah, Kaido is the best place to launch because, look at the historical data. So I feel like actually the mechanism doesn't matter as much. Yes, the futility way is good to have, but at the end of the day, it's just quality, right? So, I mean, I can speak for Kaito. Like if you look at its last launch, Limitless was, I think, 200 times oversubscribed just because it gave users exposed to the prediction market meta. It was a pretty solid project as well. And the more important thing for me is like, how does the value from the Launchpads tie to like the native token of that platform or protocol? And in this case, like the interesting mechanism for Kaito is two angles. So firstly, like I mentioned the last time as well, 2.5% of the raised amount, goes to stakers, and it's almost like a call option, right? So if the project does very well after launching, then you get more than 2.5%, right? Because in dollar amounts that has increased. So just by staking Kaito, you can benefit from every single raise that happens on the Launchpad. And if they succeed, you eat better as a staker. And the other more interesting angle is now I'm seeing it play out where basically for these capital Launchpads on Kaito, if you hold the Yapibara NFT or you stake an X amount of Kaito, you pretty much get like 30% of the raise amount at least is reserved for the Kaito community. So it's more like a token gated access, right? If you're part of the community, you get better allocation, and you just need one good allocation, and pretty much you'll make all like the amount you staked and the NFTs you hold, right? So access to these deals will be very lucrative moving forward. So I think more important for me is I'm always looking at how does value flow back to the native token. And in this case, I feel like Kaido is slightly better.
Yeah, I like that angle. I think MetaDAO has a completely different approach in regards to monetization. I can speak about that. So after the Umbra ICO ends, MetaDAO will release a future key AMM where 2 million tokens raised in the Umbra ICO will be sent and paired with 20% of the funds raised in the ICO to provide initial liquidity for Umbra. So every ICO that takes place in MetaDAO from now on will go to that new future key AMM to provide the initial liquidity to be traded there instead of Radium, which is the AMM that's used for previous ICOs. This AMM will charge 25 bips. So it basically means that MetaDAO will now earn revenue based on the traded volume of new ICO coins. And based on some projections that I had, I think this can be a very constructive business model and very attractive for MetaDAO. Like just assuming they have 2 ICOs each month, 1 year forward looking, they could have upwards of $130 million in annualized volume, which would translate to around like $5 million in annualized revenue. I mean, if they have more ICOs, like if MetaDAO becomes the place where quality founders go and raise money by sending a credible signal to markets that they are here to build, then I think you could see more than 2 ICOs per month. If you see, let's say 5 ICOs each month, like that figure rises significantly, and you can see upwards of $10 million in annualized revenue for MetaDAO, which I think is like quite an attractive figure for like an up and coming project and could justify the valuation it has today.
Yeah, actually a quick add on to that, and why I think this is so relevant now is, with Bitcoin hitting like new all-time highs and we're pretty much bullish for Q4, this is almost the ideal time for a lot of these projects to launch their token or start raising. So I think we're going to see like a ramp up of like TGEs and new like raises happening. So that's when you ask that, okay, like how do I position for this? Like obviously you can't ape into every single like launch out there, right? So, instead of playing the new launches, it's also beneficial to play the different Launchpads. So I think here Kaito, MetaDAO, Metaplex will stand to benefit of this trend of like increasing number of launches.
Shout out to today's sponsor, Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that TVL being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. AI is fragmented. Every team is scrambling to pick, swap, and manage LLM models that can't keep up. Allora changes that. Instead of choosing models, you set your goal, and Allora unites AIs into one smarter system. The result? A new AI standard. Predictive intelligence that adapts in real time, outperforms any single model, and gets better as more people contribute. From powering DeFi strategies to next-gen AI agents, Allora is the intelligence layer of the future. Learn more at X, @Allora Network. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Yeah, I would agree with that. I do think the sort of like token gated access Launchpad style, this was something that was very popular and reflexive back in 2021, if you guys recall. I mean, there were like every chain had one or two Launchpads, and back then they were far more simple, right? It was like probably they weren't quite permissionless in some cases, but they were nearly permissionless. Now, obviously, there weren't 10 or 20,000 token launches a day, but you had a lot of these, stake 10,000 tokens to get access to the pre-sale for this ICO that's then going to launch the next week. And when markets were going straight up, a lot of those Launchpad coins and then a lot of the sales that funneled through them did pretty well. I will say, like, if you're bullish Q4, if you think markets are going to rip, if you think participants are excited to get access to these sales, then that would put pressure on, potentially those platforms and then therefore those assets. But it also presents like reflexivity to the downside when, like, if we're talking about ICO mania now, if that kind of dissipates a little bit going into, if it's next year or, the next couple of months, you could see that weigh down on it a little bit. That's maybe where I would see some kind of upside here for if it's MetaDAO or Metaplex, even if they don't have that token gated model. Maybe don't pump as hard off of just access to the ICOs today, but maybe you're not at risk of maybe a stronger pullback if enthusiasm for these sales trends off a little bit. But if the revenues are tied to the trading on these markets as well, then it's kind of all interlinked in a way. So it might be a bit of a moot point, but this is something we have seen before.
Yeah, I think I really don't like the token gated thing. I think it's a better product to just be permissionless and allow anyone to contribute to the ICO. Like, I imagine there are going to be higher quality investors that maybe they want to invest in a specific ICO, but they don't want to hold Kaido. So they will, like, in that case, they can contribute to the ICO because they need to buy Kaido to contribute to it, which doesn't make a lot of sense to me. I think that's not an ideal product. Like, I know that, like, as Kyle Samani will say, reasoning by analogy leads to the wrong conclusion. But imagine, like, you had, like, to buy an iPhone, you had to buy an Apple shirt, like, first. Like, it doesn't make a lot of sense to me. I think it's better to have, like, permissionless access and allow anyone to contribute to the ICO and just optimize the ICO for higher quality investors, because, like, you do want to, like, optimize for good founders and good projects, but you also want to optimize for higher quality investors. I think both sides of the equation are important. And I think, like, yeah, I don't think a token gated access is the optimal design.
Yeah, and I maybe there's a distinction to be had here in the conversation, in that across these platforms, you probably have varying degrees of maturity in the protocols. And so, perhaps some of these MetaDAO protocols that are raising are a bit earlier in their life cycle. The raise amounts are a bit smaller, right? I think the min amount for Umbra was, $750K that they wanted to raise. I think they've well exceeded that, but regardless, it's a bit different than, like, raising at, say, a 300 or 400 or $500 million valuation for some amount of the token supply. And so in that scenario, I think you said this to me in a DM the other day, Carlos, but it's like a bit more like venture investing. And so I don't know that you necessarily want, like, all of retail to be foaming at the mouth. Like, let's token gate the access and, like, get people really excited for like a pump at launch when the goal is just to raise capital to then like maybe go and build or incrementally build a product from there, versus maybe other platforms are optimizing for, this is a product that's live, it's got PMF, we know it's going to be oversubscribed, so maybe actually token gating it makes sense because the demand is going to be so overwhelming anyway that if you just pro-rated it, it'll be like Robinhood IPOs where everyone just gets one share or something along those lines.
Yeah,
I
no,
think that's
along the same point as well, Danny. And yeah, Carlos, like I agree with what you mentioned as well. So I think how Kaito tries to do it is they balance it somewhat. So at least 30% is for the community, but 70% is still reserved for like the overall market, right? Like whoever, enters the round, yeah, there's still almost 70% allocation for you to get access to. And yeah, I think Danny mentioned a good point, right? So if it's a really hot race, what happens is it's going to be like multiples over subbed. And the main issue there is then how do you allocate to people, right? And CT, no matter what you do, people are going to be upset. So that's the truth of it. But then why not drive value back to your community, right? At least a portion of it. Like given that the sale is happening on your platform, shouldn't your community members who have been supporting you for an X amount of time also stand to benefit from this? But you're right that that does create like periods where there could be people like buying Kaito just to stake in it, get access, and after that dump it. So there needs to be some balance there. Well, maybe like they give like higher priority to those who stake for a longer period of time, or those who don't sell Kaito after these sales happen. So definitely the design mechanics still need to be worked on and out there.
Yeah, and I guess that's another consideration when we compare to like IPO markets, where typically you have flipping policies on these platforms. So like if you use Fidelity or if you use Robinhood or pick your other favorite brokerage that offers IPO access, like they'll have a 15-day or a 30-day rule where if you participate in the IPO and then you sell within that time period, maybe they ban you for the next 90 days from participating in new IPOs. We don't really have that in crypto, right? Most of this is permissionless, so it's like a lot of these platforms, you could be participating in all of these sales, buying the sale and then dumping it immediately after it lists. So that might be harder to implement, but that might be something to experiment with as well. Because I don't know that that's really been implemented at scale in any system like this.
Actually, Carlos as well, curious to hear your views on like MetaDAO's unruggable ICOs. Like the way I see it, then isn't the incentive for anyone just to like ape into these ICOs, like how like Umbra is seeing crazy demand. But yeah, wouldn't the goal would then just commit as much as you can? Because even if you get allo, worst case, the downside is kind of capped given it's like a goal-based system, right? So if the goals are not met, you get your money back. So if there's no downside, then just commit as much as I can and try to get as much allo. Like what's the game there for playing these ICOs?
Yeah, I think you raise a good point. I think, well, first of all, I think like one of the value propositions of MetaDAO is that it can be very attractive for investors because valuations are very low out of the gate, or at least historically that has been the case. I mean, we just have 2 sample sizes, but like I'm curious that now that people are paying more attention, like for instance, with the Umbra ICO, like I don't think it's as attractive as the Omnipair ICO sale was. It's just a matter of valuation. Like Omnipair raised $1 million like over a 7-day period and is now sitting like, I don't know, what is it, like 20 million or something. So ICO contributors are like up 20x from the ICO price because like no one was paying attention back then. But with Umbra, I wouldn't expect these types of multiples, to be honest, just as a matter of people like contributing so much to the ICO. One thing that teams can do is that they can cap the sale. So let's say Umbra wants to raise 750K minimum, but right now it's like at 4 million, right? Like let's say the Umbra ICO decides they just want to keep $2 million, like they will return 50% of the funds pro rata to every user, like in USDC, which is the currency they contribute in. Regarding your point that is just incentivizing people to like commit funds without like much without much thought, I I don't know. I agree with that. Like, there's an opportunity cost to just like contributing like 100K to every launch, and then I mean, you eventually run out of money, and it's not like you just get your funds back immediately if you don't like it, right? Like, it's um, like the way it works is if a founder wants to rog, or if they're not like putting in consistent updates, or for whatever reason, like token holders collectively agree on unwinding the project, they can get back the tokens from the treasury, which is what happened with the Mountain ICO. But that was a multi-month process. So I don't think like you'll see an ICO where like the founder raises there and then just next month everybody gets back their money because they don't like the token performance, right? I think it's going to be a bit different. Like, again, like this is a very novel mechanism, so we still have to see it play out in practice to understand like all the intricacies. But I do like that token holder protection mechanism because it allows investors to take higher risks on the nodes. So, for instance, let's say I'm an anon founder who's well intentioned and I'm smart and I want to like build X company. Like, I can do that because like it's very hard for me to rog if I raise on MetaDAO. So like basically, if you want to rog, or if you are ill intentioned, like you won't build a MetaDAO. Like, it doesn't make sense, right? It's like if you want to commit like a financial crime or launder money, you probably won't do that in Bitcoin, right? Because it's transparent. Like, it's kind of stupid for you to do that. So MetaDAO kind of filters like for this lemon market and allows founders to send a credible signal that they're here to build. I don't know, like I kind of went all over the place there, but yeah, let me know if that answers the question.
No, yeah, that completely makes sense. And you're right that I think a lot of the market, like why it's so oversub now, is I think people like, I mean, everyone's talking about MetaDAO and OmniPair did really well, right? So people are expecting like, hey, I enter this, I'll probably get another 10, 20x. But usually the case is that the second launch usually does not follow the success that the first one sees. And there, I feel like the better play is just to play MetaDAO itself, like keep it simple. And then as and when you see a project that you're actually interested in, then you invest. But yeah, I feel I do agree as well. I don't think Umbra will like be as successful as OmniPair. I think it's just hype given the current meta now.
Yeah, and I think one thing you can do, like one thing MetaDAO can definitely benefit from is just having a lot of ICOs. Because if you have a lot of ICOs, you actually have to do due diligence and see what project is good, because you cannot like just like invest 100K into each launch, right? And like just see what happens. Like, I think as you get more ICOs and they are like launched concurrently, you kind of force investors to do some due diligence and and see which one is better. Because I will like, I could bet that people aping the Umbra ICO, like probably 50% don't even know like what Umbra does. They just like aping the ICO in the hopes that the token goes up.
Yeah, I think we're seeing, obviously MetaDAO has repriced up significantly, and probably people playing the momentum here or have also gone and looked at OmniPair, and now are looking at Umbra and probably any other sale that pops up. So I'd agree with you there that like a higher volume of launches would dilute that effect a little bit. But certainly like in the immediate term, the kind of the current run, the momentum, the narrative there, it's fueling additional participants in, which makes sense.
Yeah, I just want to add like thankfully we have Carlos on the team who does the DD for us. I think literally like half of us just texted him over the weekend asking him like, dude, is Umbra like a decent bet? So
Yeah, I don't know. I'm not willing to put my hands in the fire for this one, but like, I mean, it could do well based on the privacy narrative like we've had over the past week. I don't know if you guys want to like briefly touch on that. Like, we saw, again, I think I mentioned this, but we saw Zcash bump like 130% week over week. like every cycle we get the same thing, like privacy becomes hot for a while. Do you think we're due for a privacy narrative, or like it's just like temporary thing?
I think we're definitely in it right now with that move. Like that's ZK's highest price since 2022, maybe. So it's been a long time. I do agree with you though that like historically, privacy is a category that's like very difficult to look at from like even Zcash itself. Like you're not looking at this thing from a fundamentals perspective. It very much is like something of a narrative, and like, you know, how much do you value a, you know, some on-chain permissionless but also private network relative to other maybe non-private networks that exist. It's a bit more dubious in that respect. And so I don't know, the like broader social and like cultural narratives that are prevailing can play into that a little bit. I do think we see consistently, like as the years go on, you see more people who are like more scared or like concerned about like, oh, the government, the state is, you know, they're going to make us all use CBDCs and they're going to track all of our money and like, you know, have control over that. So, you know, you could see some of these privacy coins or networks as like a hedge to that idea, which I think is why probably a lot of people have maybe looked at these or allocated to them in the past, is like kind of a hedge on that perspective. But I don't know. I feel like I have no insider alpha as to like how long it could last. It's historically it's like a very spiky and, you know, irregular sector even compared to the rest of the market. Any thoughts, Kunal? Were you ever a privacy maxi?
No, yeah, this sector it's a bit foreign to me.
Yeah, I do think I agree with your point though. Like for the Umbra, it's a kind of a double whammy. We're seeing a little bit of a privacy push, Zcash pumping, MetaDAO pumping, like ICM, ICOs, kind of all colliding, and Umbra's sale being right now. It's pretty good timing for them. I will say the consistent thought in my head is like we've seen a lot of sales of this nature where they're, you know, the team could cap it if they want to, they could cut it off, but for the most part, it's like contribute as much as you want, see what happens. Not to say that Light is the same product, but or some of the other like ICO pre-sales we've seen in the past month or two. But typically over the past couple of months, a lot of these sales have looked like, you know, the sale runs, completes, opens, and then trades lower below whatever the raise valuation was. And then if it's actually a good protocol, maybe a week or two goes by and then it trends up. Even cards, I think, is a good example where that ICO happened. It traded below the valuation of the sale price for a few days, maybe, and then went on a crazy run because of the TCG meta. So I could see that happening again.
Yeah, I think, yeah, just one last point. I think this is where it differs, right? Where the mechanics are a bit different, because whatever they end up raising, whether they cap it or not, those funds will go to a treasury that is a smart account on Fuse that is governed by FutureKey, and they can just spend like a given amount per month. So let's just say 50K per month. So what that means is that if the token starts to trade like, let's say 50% below the raised amount, it means it will be trading 50% below book value, because you can like actually say like this is trading below book value because this is the money in the treasury and that belongs to token holders. So I think like it does create like a different kind of mechanism, where you can arguably like have a fundamental floor price, because like that's actually the book value that belongs to token holders. And that goes back to what you were saying earlier, Danny, where this is more like earlier stage investing, where you are actually contributing for the team to give them runway to build a product to go achieve PMF and achieve revenue and get their users, etc. Right? So it's not like you're contributing to an ICO sale for Plasma where they already had their product, they had already gone through 3 rounds before. you're contributing to a project that's you're betting on the team and the idea more than the product that already has PMF, right?
I like that. I'll add one last point is that I love whenever we say it sets some kind of fundamental floor because we're assuming that the market is entirely rational, which it is not. So it does present potentially an opportunity where if it does trade below that value to a meaningful degree, you know, and maybe the actual sort of fundamental floor based on how the platform works is like, you know, 95 or 90% of book value or something along, you know, what's their burn rate relative to the cash amount that you'd actually get back if their funds return. You could do the math, right? You could figure out what that number is. So then to get a discount beyond that, you know, then that might look like money, you know, money on the floor that's worth picking up. I do recall like people were saying a bunch of DATs have, you know, fundamental floors at like the value of their MNAV. And then like when they end up trading at 30% discounts and you're like, okay, well, like this is either the point where you start saying that you're going to step in and pick it up, or, you know, maybe the market isn't like as fully rational as we would always want it to be.
No, I mean, for sure, it can trade below, like it can trade below. There's nothing stopping that. I'm just saying that with other token designs, you maybe don't have guaranteed token holder rights. Like I'm going to give the example of the Pump ICO. Like Pump was trading below book value for a long time after the ICO when it drew down. But the problem with that specific example is that there was actually no clear value split at the beginning between token and equity, right? So token holders didn't know what percentage of revenues belonged to them or what percentage of the treasury belonged to them. So the market said like, yeah, like let's just assume nothing belongs to the token and it all belongs to equity. And what that forces it forces certain kinds of mechanics in the market. So what the Pump team decided to do at the end was, well, let's just use 100% of the revenues to buy back the token. Is that the most efficient use of capital? It's not, but it has turned into the only way for teams to tell the market that they care about the token. Otherwise, people just assume that your token is a scam and all value is accruing to equity. With MetaDAO and FutureKey, that is different because you have a credible way of sending a signal to the markets that the token will accrue the project's revenue and you will benefit from the project's success without having to, let's just say, redirect all the revenue to buy back the token. So that's just kind of more or less my point, where you actually have like a clear value split. It's not even a value split because there's no equity, right? It's just all value accrues to the token, which is kind of nice.
Yep. No, yeah, I totally agree with you. I'm just making more so the point around, you know, post-sale price action. If you then get that, you know, kind of typical post-sale or like post-airdrop fractal, as we commonly refer to it, because of this mechanism, you have like more of a concrete kind of idea there that like, you know, this actually is something of like kind of like pennies on the floor that you're picking up for free. You know, if it's trading below its, you know, book value, and then you could buy at a 30% discount, and then, you know, the holders or the sale participants could, you know, choose to get the money back. You end up a winner in that scenario, type of thing. So yeah, I totally agree with you. But we'll have to see. Does the intersection of these narratives, is that meaningful enough for Umbra's? We'll have to see post launch. So far, they've raised well over their cap. I think it's sitting around or above 3 million raised from their original min number at like 750K that they were originally asking for. So we'll see where it goes from here. But before we jump on to our next topic, I'm going to do a quick shout out to our sponsors for today's stream. Katana. This episode is sponsored by Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added VaultBridge yield, and other chain revenue. Follow the link in today's show notes to get started. Outside of that, we spent a lot of time actually. There was a bit more heated conversation, thoughts on ICOs than I expected. One of the other topics I wanted to bring up we can also talk about prediction markets, but I think this is pretty interesting and maybe worth discussing as well. As this, we talked maybe a month or several weeks ago about the SolDAT trade. There was a lot of kind of marketing, or like it was well known in advance that several large DATs were going to be formed by Sol. Either buy it up off the open market, in some cases buy locked Sol, whatever it may be. We did see Solana and like a bunch of Sol beta coins kind of catch a bit of a bid off of that over last month for the most part, I want to say, or at least over several weeks. Some things got priced up. I think now we're at the point where there's a question to be asked of like, when we think about back to like the ETH DAT trade, I would say that was a relatively unexpected time in the market. Like, kind of went from 0 to 100 where no one was really expecting them to be much of anything. Like, we kind of thought the DAT thing was like, I don't know, maybe already a little bit dead. Like, Sailor is already the king, of accumulating Bitcoin. Like, is this really going to be meaningful for ETH? And then they went and bought up like millions of ETH in a couple of months. ETH went from like 2K to 4.5K. But since August, ETH has basically been flat. The DATs are still gradually accumulating, but they ran up and grabbed. They accumulated up to like 3.5 million units of ETH in the first like 2 or 3 months of that. And since then, in the past 2 months, it maybe only added an additional like million ETH or so. So that the pace of accumulations is like slowing down. They're in like that kind of log, or the log part of the curve where it starts to maybe slow down a little bit, maybe similar to kind of how Sailor's buys look right now, where before he was slamming in billions, everything was going up, he got more money, then he could keep slamming it in. Question now is are Sol DATs at that point in their cycle where they've got their big bids have already been slammed into the market. We saw Forward, the DAT, basically raised $1 billion plus, and essentially already shoved that into the market. A few more DATs kind of have popped up and purchased up Sol. I'm wondering like how we're thinking about Sol, how we're thinking about the DAT trade. And maybe the caveat here is that I think pre-DATs, we were thinking, okay, this is going to be a crazy combo of DATs come online and ETFs come online. And that's going to be a ton of buying. So it's like, even though the rumors are already out of the bag, like you can still buy because there's more flows coming. DATs are online, but we're still waiting for major ETFs. So how are we guys thinking about Sol beta, like in this sort of like largely flows dominated market?
Yeah, like just to put some figures for context, I was looking at the September figures, and Solana focused DATCos acquired around 9.8 million Sol. So that's around $2.2 billion worth of Sol. The majority of that came from Forward Industries, Danny, as you were alluding to. Like in less than a week, basically, they shoved like $1.6 billion into the market, and that drove Sol priced at around $240 per Sol. And yeah, it retraced after that. There's also Solana Company by Pantera. They have bought a few hundred million worth of Sol as well. I think one interesting thing that you mentioned is this relationship between DATCos and ETF flows. So in July and August, when ETH was outperforming, you essentially saw $2 of flows go into ETFs per every $3 of flows go into DATCos. With Sol, that ratio has been much smaller. So in September, you saw just $1 of flows into SSK, which is the only ETF live for Solana, for every $15 into Sol DATCos. I think that can change significantly once ETFs go live under the 33 Act this month, because these ETFs will have like better distribution. They will potentially enable staking, and they will be more tax efficient. So I think you can like increase that ratio like from 1/15 to maybe like 2/3. Like maybe that's a bit of a stretch, but like you definitely reduce the ratio. So you could see multiples more going to Sol ETFs this month, I think.
Yeah, I mean, definitely agree along those lines. The trend that we're seeing, the same thing for like ETH DATs, is that a lot of these DATs will launch at like a high MNAV, right? And eventually this MNAV tends to erode downwards. And we see the trend as it erodes downwards, the ability to issue shares in size, raise capital, and buy more ETH or SOL declines, right? So we saw that with ETH, and I think that's exactly what's going to happen with these SOL DATCOs. And over time, initially for these, when the ETH DATCOs were like picking up, you could see the ETF flows for ETH were also like much more significant than Bitcoin inflows. But in the recent few days or weeks, it's back to like Bitcoin ETF flows dominating and being the dominant ETF. So I think, yeah, that's the trend we're going to see. That I think as when the SOL ETFs get approved, they will be a more significant source of inflows and bids for SOL as compared to these DATCOs. So I think moving forward, I would be giving more emphasis to the SOL ETF and flows we expect from it. And I do think we could get a pretty decent rotation, right? Like I think TradFi moved a fair bit from Bitcoin to ETH, and I would think they would want to go further down the risk curve if market starts to pick up. So I would expect some rotation into SOL. But yeah, I mean, given the government shutdown, I'm not too sure if that affects the timeline of when these ETFs get approved. So that might affect, how much of a pump we see in SOL.
Yeah, I think these are great points. I'd echo a lot of that, and I'm just showing the data here on some of the ETF flows to accompany that. But yeah, you definitely, like if you look at the first one you mentioned was BTC and ETH, you can see where kind of before BTC is dominating ETF flows, and then into June, July, August, we see ETH really pick up, and it's more obvious when I just leave it as the only one on this chart. But you can see where it really picks up, and I think that's on some of those large sort of like raise announcement days or like peak kind of excitement days for like Bitminer, SBET, some of those larger ETH DATs. But since then, there's been outflow days, inflow days. It seems like basically the ETF flows for ETH have been a little bit more flat, or sort of like net neutral, if not maybe slightly positive. But we're not seeing these like big impulse inflow days anymore. But also worth pointing out that if you look back just to the beginning of this year, the total amount of like daily inflows were in the tens of millions, maybe, or even outflows. And that's kind of how the SOL flows look today with just the Osprey one. We're sitting in the, low 7 to low 8-figure amounts on a daily basis, but, trending towards inflows. So I do think there's a good point there where if you get the meaningful issuers in, you could see this dramatically expand, especially if it coincides with, if either new DATs continue to come online or if they continue to bid for a decent amount of time. You could see those compound on each other, as we saw with ETH, which could lead to some outperformance over, maybe a month or two, like we saw at that time. Maybe a little bit shorter, since again, this is like we're seeing it play out again, and so maybe the market anticipates some of that and kind of puts in some of the price action ahead of time. But I do think the government shutdown is maybe a question there. If the DATs, the SOL DATs, get sort of to their tapering off portion of their life cycle here, like we've seen with, I would say in large part, like the BTC DATs, the ETH DATs now, they've tapered off quite a bit. Saylor is not able to ship in $1 billion every week anymore. He announces his buys on BTC and it's, 10 mil. I've just purchased 10 mil. I've just purchased 100 mil for strategy. It's like very meaningless relative to their stack of whatever it is now, like 80 billion or 100 billion in Bitcoin. He's not really like moving the market anymore as he was, end of last year, beginning of this year. And so that's maybe a question mark here, is if you delay SOL ETFs by a month, like I don't know how long this government shutdown will go on. Maybe you miss that window where they can compound each other. And that could have an impact. But the opposite, maybe the counter argument I'd make is if DATs taper off and then ETFs come online, maybe you can, sustain some consistent flows for SOL for a few months. Whereas for ETH, you had that sort of brief burst of, everyone is buying a shit ton all at once. And then it fell off quite significantly. And ETH's been flat since, basically.
Yeah, if I had to bet, I would say SOL ETFs go live this month, like almost 90% plus probability. But admittedly, I'm not an expert in US politics, and I don't know the implications of a US government shutdown. But yeah, I think the most likely outcome is that Sol ETFs go live this month. But yeah, it will be interesting to monitor the flows. I think one interesting topic around this is like, do you want to bet on assets where the thesis is essentially, yeah, TradFi will bid, you will have a lot of flows? Or do you want to bet on assets that have underlying fundamentals? I'm not saying that Sol ETH don't have fundamentals, but what I'm saying is like, what's more sustainable, right? Like the DATCO and ETF flows, or like maybe assets like Pump or Hype, where those flows are actually generated by buybacks, which go back to like real users and revenue. Like that's one of the things I've been thinking about in recent months. Like I think over the long term, you kind of want to bet on the latter, where these types of flows where you have users and revenue, and that's what's like driving back the buyback and flows, like are more sustainable than saying, hey, I expect like 2 months of outperformance due to institutions just aping my coin, which is a fair like a thesis, but like I'm just wondering for a longer term investment horizon, like what's your take?
Yeah, I can go for that. My preference would be like getting these institutional bets, and I feel like the assets that have done really well this year, like the majors, are just those that have institutional capital flowing into it. And the main reason is like if you look at like protocols like Pump or other tokens on chain, it's basically the same capital that's flowing from one token to the other, right? You're not almost getting new liquidity in the system, and that's like if you want to like a prolonged pump in some of these tokens, you need new capital flowing in, and you're not getting that, in my opinion. It's mostly institutional capital, and the way they are accessing these markets is through these DATCOs or ETFs. So if something like stable and something I would do in size is just going for these assets that have these institutional flows, and then again a portion of my portfolio I'll place some of these other hot tokens, but even then I trade them more actively than hold them, just because yeah, it's very narrative driven, and even the most like fundamentally solid coins will go through these rotations. So it's about catching the rotations in my aspect.
Yeah, I'll use Pumpin as an example because I think in the case of Hype, it's sort of been an outlier to the rest of the market broadly. They've been growing really without stopping for the most part. But if we look at Pump, I kind of agree with Kunal to an extent. Like I think there are cases where you can zoom out in crypto, and it probably helps as well. Like, pre-token Pump, if you're just a VC, like, you're not selling. You're waiting for them to actually, do the next raise, actually launch the token, et cetera, et cetera. But now that the token is live, I think just like going back and looking historically at their trailing revenues, like you can see the cyclicality in the attention on memes and like the revenues that they've generated on the trading volumes there. And like, you see these kind of cyclical time periods where, activity trends up quite a bit. Everyone is running the, what's the current valuation based on trailing 90-day revenues at like the literal peak. And then, activity falls off 50%. And it's like, well, now it doesn't look so attractive anymore. But I don't know. It's always in those times when, that's then when you want to make that new trade and probably consider, maybe the next kind of cyclical sell out of it event when people start running the, let's annualize the 1-day numbers again and look at the valuation. It looks so cheap again. Yeah, I don't know. I think that while I said it earlier, like we've been trending more and more in this direction of like, you can start to zoom out a little bit on crypto things. In large part, I do agree with Kunal that like narratives, cyclicality, like kind of like, liquidity and demand for tokens is just so continually volatile that oftentimes I do think many things are just a trade and not a long-term hold. Like there's very few, like maybe Bitcoin, and you could maybe zoom way out on, like ETH or BNB or Sol. Like there's a few cases where, yeah, like that, those are just holds. But, we know that in a year or 2 years from now, probably a lot of protocols that exist today, even if they are generating revenue, probably may not exist in that time period. There'll be new competitors. It's such the permissionless nature. Anyone can launch a protocol. Anyone can start making money on chain, right this minute. Means that there's always new competition. Like we saw, I think Axiom is maybe a good example of this, where the trading bot market was dominated by Photon and Bullx and some of those, and then Axiom came in and took 60-70% of market share within 2-3 months. Took no time at all, and that's something that category has seen over and over again, where a new incumbent comes in with like now the newest best set of tools for on-chain degen meme traders. They refine it a little bit more, and then they can onboard a bunch of people really quickly. And then inevitably in like another 6 or 12 months, somebody does it again with like a new, better iterated product. And I think just kind of the nature of where on-chain things are today, like there really aren't very strong moats. Users can still switch from platform to platform. Like nobody's really locked into anything. And so we tend to see this over and over again. You have to like constantly be executing and having the best product and like always iterating on that. And to date, Hyperliquid has done pretty well, but their token launched end of last year, right? So how does Hype look in 2 years? Are they still around, or does a new competitor come in? I don't want to scare all the Hype bulls. I'm not saying that Hype is a zero or anything like that, but it's just kind of the nature of the industry. So I just think when you really want to zoom out and hold something, you have to be very selective. And even if you are, you might miss.
Yeah, I don't disagree with you guys. And I would echo your points. Also point out that competition is not just unique to crypto. Like every industry is fiercely competitive, like in a free market. Like more so my point is, I think like equities are getting all the attention today, and like all the focus is on like institutional flows and stuff like that. And for sure, we're in a flows driven market. But I think like right now is the time where it may pay to be contrarian and just be like, as you say, selectively investing or allocating to on-chain coins that just have like strong fundamentals and that you believe that can be around like a year from now, 2 years from now, maybe 5 years from now. So I think like, capital may be a little bit like zero sum today, where you just have like the same amount of participants like rotating, or like it might be a good time as well to buy cheap before like eventually capital comes on chain.
Yeah, I think I agree with you, if framed slightly different, in that I think because of the access to data, I think this is something that Ryan has said before, but like having daily revenue numbers is probably like more of a curse than it is anything else, because people index to the data, like to the recent data so much, when it really like probably doesn't matter that much. Having some fundamentals now is great, but it's more important that like you have, if you're looking out 2 years, then they need to have fundamentals in 2 years too. And so you can be, doing a ton of revenue today, but if what you're building or your path forward means you're going to see a 90% decline in revenues over the next 2 years, then it's a miss, right? Like, how are they attacking or going to fit into that future piece of the market is probably the hardest question, because we see so much like displacement. But I do agree with you that like it often does pay to be contrarian. Like, and MetaDAO is a good example here recently, where if you were looking at that and you thought that was a great idea, and you were looking at OmniPair and like it was underlooked, and the sale at that time was, would say broadly overlooked, and then it traded, below the initial sale price for a little bit, and now has had a pretty strong run up now that attention is back on it. I think maybe that's the bigger point, is like, sometimes it pays to be like where all the attention is. Other times it pays to be like outside of the attention and like waiting for the puck to kind of skate to you a little bit. But fundamentally, I do agree with you.
Just to like quickly end it off, like the way I look at it, it's you always got to look at who's buying and who's selling, right? And how much are the amounts. And for a lot of the bigger tokens, having that institutional bit helps, because there's just a lot of consistent buy pressure. And for some of like Bitcoin, ETH, so like the sell pressure, it's more minimum, right? You don't have like ongoing unlocks, or Sol had it for a period, but it's much lesser. So you can hold these tokens with a lot more conviction. the thing with like a lot of like the alts out there is, firstly, the buy pressure is very rotational, right? You got to wait for the narrative to shine on you, and then you get a lot of buy pressure. Like, of course, pump and hype are exceptions, because that buybacks that they do every day at least helps to add to the buy pressure. So that's a good bonus. But I can name a lot more alts which don't have that sort of buy pressure, but yet on a daily or monthly basis, they have like strong token unlocks by the team or investors. So in that case, it almost like makes no sense to hold these tokens, or if you hold it, you have to be very selective. It's almost like a month trade. And if you zoom out, a lot of these tokens make a very good short leg to ETH, BTC, or SOL. It's just like zoom out, and these trades work really well. So at least that's the way I approach it.
Yeah. Sounds like tokens are broken and MetaDAO fixes it.
Good,
He's
good
so
way to put
bullish. Carlos is saying higher. I will say I listened to, and maybe to round it out, I was listening to a Peter Lynch. He did an interview just recently that's out on YouTube, legendary investor in TradFi markets. But one of the takeaways is like, if you know what you own, then you can hold through drawdowns, and then inevitably or eventually, hopefully, hold through draw ups or repricings upward, and make a lot of money. I think in this industry, it's like with so many people who are just trading, like you say, Carlos, so many people are just trading momentum. They're just trading the flows. They're not trading any of the underlying. And so that leads, like, that kind of compounds some of the volatility and the reflexivity, and that if you have so many people who are piling into a coin because it's like, this might go up higher, then when it doesn't go up higher, they're like, oh man, should I sell? And then you see, up followed by down, followed by up, in like kind of over and over again with the next new narrative. Whereas, if you're bullish on something, if it has solid fundamentals today, you see the path for its success in the future, and you can just sit around, hang out, zoom out. You're not worried about the price action on the day to day. Maybe you're buying more of it as it trends lower because you think it's still rock solid. If it catches its part in the spotlight at some point in the future, then you're set up in advance. You're not like chasing the crowd, so to speak. I feel like we've thrown out so many of the common words of wisdom in markets, so many catchphrases, but I think they all stand. So know what you own. Fundamentals are meaningful if you're not trying to be a pure flows trader or narrative trader. But maybe just to say that narratives still are pretty meaningful in crypto. And even in the stock market today, narratives are pretty meaningful right now. You can probably buy any ticker that's related to AI, and you're doing okay this year. In crypto, it's maybe more of a month-to-month, quarter-to-quarter basis that the narratives, or even week-to-week or day-to-day sometimes. But we can leave it there. I think that was a great pod, great chat, guys. Any last thoughts on MetaDAO or anything else? Carlos, where's MetaDAO headed? Not financial advice.
I don't know. Short term, I don't know. Hopefully up, but who knows?
His bags are speaking for him. All right, we'll call it there. Nothing else. No financial advice on the show. Thanks for tuning in, guys. We will see you later this week on Friday. We'll have a special guest for you, actually. They just made a really big announcement, I want to say last week. So we'll have some of those guys on to chat. I'm not going to spoil it now, but you'll find out then. Until next time, we will see you then.
All right.
See you
Bye,
guys.
guys. Yeah.